give it another minute or two, folks, just to make sure that we have critical numbers. Okay, I think we're ready to kick off, and if other people join, that's great. Let me introduce myself. Ken Burke is my name, and I'm a senior advisor with Chorus, and I'm chairman of the SME banking community. And for those of you who don't know me, my background is SME banking with retail banking, commercial banking in Western Europe, but I've been working with Chorus for a number of years. I'm delighted to chair today's session on a topic that I think that is rapidly transforming the way small and medium-sized enterprises manage their finances, the rise of super apps in SME banking. When I think about this, in a world where SMEs are facing increasing pressure to move faster, to stay leaner, and to scale smarter, we're definitely seeing a new breed of platforms emerge, offering banking, payments, invoicing, payroll, lending, and much more, all in one place. So I suppose these so-called super apps are positioning themselves not just as banks, but as the financial backbone for the digital-first SME. They promise simplicity, automation, and integration, but they also raise important questions about trust, regulation, and long-term viability from a platform perspective. And when you talk to SMEs, they constantly talk about the challenge of juggling multiple platforms. And an SME, if they're trying to manage their banking, their finances, their accounting, their payroll, their merchant payments, they can be dealing with 10, 12 different platforms or systems or apps. So the need to consolidate that into one, or the wish to consolidate that into one, is huge. We have great speakers today. Dorka, if we could just put this slide so we've great speakers with us today. We've Jose Agui from eBankit. We've Aditya from Standard Charter, and we have Boris, who hopefully will join us later in the session, from Anna Money. We did have one speaker, unfortunately, due to personal circumstances, pulled out over the weekend. So we may have we had time allotted for a third presentation today. We may have a slightly shorter session. So I know we're scheduled to go for 90 minutes, but if I think we've covered the ground, I may pull that in earlier. As always, I'm encouraging people to participate, to raise your hand, use the chat function, and vote in the Slido polls. If I see a question coming in during a presentation, I'll make sure we cover that immediately after the presentation, or if it's not specifically related to the presentation, I'll deal with it in the panel discussion afterwards. So this is the flow for today. We're going to have the expert insights from eBankit in a few minutes, and then we'll be followed by Aditya from Standard Chartered, and then we're going to have the open discussion and wrap up. We're going to kick off with a Slido poll, and hopefully you're familiar with this format. So you can access the Slido poll through Slido app. Do we have the QR code as well, Dorka?
Yes, we'll pull it up.
Great. Okay. So the first Slido poll that we'd like people's engagement in, we really just want to test the state of the nation. What is your bank's current stage when it comes to offering a super app experience for SMEs? So we're going to pause for a minute while you join us on Slido, either in the app or scanning the QR code. And very keen to get an initial litmus test as to how your bank is engaged or otherwise in super apps. Interesting. Just starting, exploring the idea. Yeah. Nobody putting their hand up to say that they already believe that they have nailed this. Okay. 13% not on our roadmap yet. 13% have developed a platform with external integrations, and 25% already bundling some services. And 50% or half of our participants are saying they're just starting and exploring the idea. Jose, do those results surprise you? Is that what you expected?
To be honest, no. This is exactly what I expected, and this is what we experience daily when dealing with these banks all around the world.
So we're at early stages of maturity is probably the way to describe it, yeah?
Exactly, yeah.
Okay, thanks for your input, everybody who has cast their votes, and that's really useful, and I think sets us up well for the discussion. Okay, to kick off, I'm going to hand over to Rui, who's going to give us an introduction to eBankit, and then Jose is going to take over and walk through the formal presentation. So Rui, over to you.
Thank you so much, Ken. Thank you, everyone. Good morning, everyone. I'm Rui Brito, and I'm proud to be part of the sales team here at eBankit. Well, I'm really passionate about helping financial institutions to modernize and innovate through cutting-edge digital banking technologies. Let me just share a quick word about eBankit. We are a global fintech founded 11 years ago in 2014, and we specialize in omnichannel digital banking platforms. That's that. So we are present in more than 12 countries today, and we have clients all over the globe, in North America, Europe, Middle East, and Africa too. So we have the mission to empower banks and credit unions too, of course, to deliver humanized, accessible, and personalized digital experience across all touch points, from web, mobile, voice, and also wearables. So as we stand in the crossroads of convenience and complexity in financial services, one concept, and that's what we are talking about today, is gaining serious traction. And that concept is the super app. At eBankit, we see the super apps as a natural evolution in digital banking. Excuse me. They offer consolidated access to financial services alongside lifestyle functionalities like payments, investments, budgeting, and even non-financial services. That's important. We believe that banks have a unique opportunity here. By leveraging their trusted customer base, of course, and their strong compliance frameworks, they can become the next generation of super apps providers. And how can they do that? We will try to talk about this today, but many ways also by integrating third-party services through composable API-enabled architectures. That's also important. This isn't a new idea. In fact, I'm sure everyone already heard about the super apps, and especially in Asia, Africa, Latin America, super apps have long brought together everything from payments, lending, messaging, transport, lifestyle services, all in one seamless experience. And while the growth in the West has been slower, well, we think maybe this year, the next year, maybe just the tipping point at this moment. How do they evolve? From being just service providers to become full digital ecosystems, meeting customers exactly where they stand. It's not just financial tools, but that is end-to-end business solutions. That's we think it will be the full platform. We are not saying at eBankit that banks need to become the next WeChat or Grab, but we think that they need to embrace the core principles behind those models: modularity, integration, and hyper-personalization. It's about open banking, it's about building strategic alliances, and it's about delivering secure, scalable, composable platforms that truly adapt to client needs. Up next, Jose will walk us through how this actually plays out especially in the context of commercial and business banking. Because in this space, it's not about offering more features, it's about offering the right ones, delivered in the right context at the right moment. Jose, over to you.
Thank you, Rui. Thank you for the introduction. Let me start by sharing my screen here. I think you guys can see it now. So,
All good. Thank you.
as said, we are going to cover from the banking perspective, meaning from a platform building perspective, the rise of super apps in SME banking. This is the agenda for the presentation that I have prepared for you guys today. So we are going to go through a little bit of history, very quick history of the super apps. We are going to look at the SME reality. So what does this mean in terms of companies and in terms of banking as well. And we are going to be ambitious and try to get to a definition of what does it mean an SME super app and what will be the blueprint of the super app. We'll try to build also a roadmap for financial institutions to reach to this point and then close with some remarks. Okay, so super app timeline. It was back in 2010 when BlackBerry's founder Mike Lazaridis he coined the term super app in the Mobile World Congress, and it stuck. So it stuck that not only the term but the concept, and this is a term that we are still using today. WeChat launched the next year in 2011. This is relevant because WeChat today is one of the biggest super apps. This is a company or an app that got 100 million users very fast in only 2 years, and then started laying out social feeds and city services, and it would later in 2013 integrate payments into their app as well. So today WeChat is the standard payment for Chinese consumers, and this is also very relevant. So a number of other apps appeared. So Gojek in Indonesia, Rappi in Latin America, and Russia's Tinkoff app. Russia Tinkoff app is relevant to the conversation today because this is the first regulated bank that tried to go the super app route, okay, and they did that in 2018. So they become a lifestyle marketplace app where they aggregated tickets, travel, insurance, and this is really the first financial super app model that we have seen. 2020 WhatsApp Pay launches in Brazil, so this is a very relevant payment method in Brazil. PayPal also in the US in 2021. They launched their own version of a super app. They combine payments, savings, crypto, shopping rewards, bill pay, all of these into one single experience. Elon Musk, so as we all know, he bought Twitter, he rebranded it to X, and the public is set out plans for an everything app. That's what he calls it. So he has plans to mix social payments and commerce within his X platform. And we come to today, where super apps, all of the regions have at least one super app or one main contender to super apps, and there is a lot of talk about interoperability, not only in terms of super apps but also financial services, all these AI revolutions. So there is a lot of talk within the regulators on how all of these things can work together. And before we talk SME super apps, let's understand what the SME reality represents. So across the EU, there are 32 million companies, and then an astonishing 99% are micro and small size, meaning that these are companies with fewer than 50 employees, 99% of them. And then we have medium firms, between 50 and 250 people. This is like a rounding error, 0.8%, and true corporates are just 0.2%. And those micro and small firms, they are not just paper entities, because they hire half of Europe's private sector workforce. So out of 160 million jobs, micros and small account for 48% of the workforce, while mediums add another 15% in all of that. So this means that 2/3 of these people and the paychecks of all these people depends on these types of businesses and we are talking about businesses that are still struggling with manual invoices. Also, in terms of turnover, this is significant. Of course, the largest corporations, they take most of the turnover, but nevertheless, if we add together the micro and the medium, micro, small, and the medium enterprises, we have nearly half of the turnover generated by private businesses. And in terms of financial services needs, so we gather what we think are the top three SME complaints, and no matter what the country or the sector, this is consistent throughout all of Europe. So first, the basics still hurt. Opening an account or paying a supplier, this can trigger emails, emailing PDFs, emailing contracts, days and days of back and forth, KYB. And we need to remember that most of these companies are very, very small. So owners are doing this, all of this stuff after 7 p.m. when the shop closes. And also working capital credit for a small firm is often, again, slow, manual, and very, very pricey. So while big corporates issue commercial paper in hours, the cafe down the street will wait weeks for an overdraft and many times pay double-digit rates. So this gap invites, of course, the alternative fintech credit solutions, so like BNPL for B2B and the others that we have seen entering the game recently. On the top of all of that, Gary referred this on this opening, we have a fragmented ecosystem. So the average European SME juggles between 6 and 12 separate finance apps to cover online banking, cards, invoicing, FX, tax, payroll, and the list goes on and on. So all of these apps, they are separate, independent, they don't talk to each other, so the owner becomes the API. And again, he's doing all of this at 10 or 11 p.m. at night. So each of these pains, we can see it as an opportunity, of course. So this can be a revenue lever. So we can fix payments and we will win the deposits. So if we fix the funding, we'll earn the yield. If we fix the fragmentation, we have the opportunity to become the daily hub for all of these users. And that's exactly what the challenger super apps are targeting. But let's take a look at another very important data point. So how SMEs actually feel about their banks right now. So Forrester's 2024 European Banking report shows that the industry average in terms of NPS fell again. So this was last year. But the challenger banks, the new banks that are coming into the scene, they buck the trend. So in every single country, they top the satisfaction table. So it was net promoter scores of around 14+%. On the other side, we have a McKinsey stat that states that 1 in 3 SMEs are ready to switch providers, and they will do that purely for a better digital experience. So, and what are these challenger banks and neobanks? How are they disrupting the financial services scene? So let's try to map these pressure points where these challengers outperform traditional banks for SMEs. So first, we have account opening. So while most incumbent banks, onboarding still means PDF, signatures, even a couple of branch visitors, challengers, they flip that. So we need a selfie, an ID scan, and you're ready to trade in minutes and not days and not weeks. Also regarding fees and pricing, neobanks go very transparent and very simple. So there are 2, 3, 4 flat plans, easy to understand plans versus complex and hard to understand long price lists. These banks, of course, are leveraging technology. They are streaming live data via open banking APIs, via the cloud, via AI-powered risk engines. They are leveraging all of that, and they understood the importance of quick transactions. So these new entrants, they are riding the instant payment rails. They can issue loans again in minutes versus days or weeks with very little friction. Also, an important aspect is around the lending criteria. So traditional banks still lean on collateral and 3-year financials to concede a loan, while these neobanks are leveraging a lot of data, leveraging AI and technology to allow them to make very, very quick decisions. Not less important, the customer support, which is a pain in traditional banking. So a branch queue or a 9-to-5 call center, this does not cut it anymore. So digital challengers, they have embedded 24/7 chat, they have multilingual bots, and data-fed human agents right in the loop. They also provide the challengers. They also provide integration capabilities. They have plug-and-play connectors to accounting software, to payroll APIs. Some of them, they even try to do this by themselves. They have this offering. And well, all across these categories, we see the trend of these disruptors are trading paperwork and latency for speed, transparency, and embedded intelligence. So this is a trend that we are seeing throughout. And given this scenario, I think we are ready to start talking super app and to start to design a blueprint of what would be an SME banking super app. Gartner, this Gartner projection is striking. So by 2027, so this is less than 2 years from now, half of the planet will use one or more super app, and of course financial services are the top use case for that. So what does this mean, and what does this mean for banks? So do banks have what it takes to assemble this kind of stack? So this is what you're going to see, and we'll unpack the roadmap next. But let's try to to define a super app. So all of these apps that we have seen, mainly from Southeast Asia, but not only now. So we have super apps all over the place. We have seen each wave start with a single daily habit, being it a chat or a ride-hailing app, a wallet app, or even a bank account. And we add payments on top of that. Okay, so when we have payments and we open a platform layer for third-party services or for third-party mini apps, we create a self-reinforcing ecosystem that keeps the user and the user's data inside one single digital front door. Okay, so Mike Lazaridis, he said that a super app must be multi-service, embedded, data-rich, and ecosystem orchestrated. So this is his definition of a super app. We have seen a number of other definitions throughout time, but they all just build on top of this core concept. So in this screen, we are seeing what we believe are the four main pillars for a financial super app for SME. So first, we have transactions. So we need to nail the transactions. The super app still lives and dies on payments, and all of these experiences, they need to be seamless. They need to be buttery smooth. Then we have the platform, meaning the orchestration, the brain. So when we talk platform, we'll talk orchestration, identity, consent, security, API. So all of those elements, they live inside this layer. On top of that, we snap the embedded services. So lending, insurance, invoicing, payroll, tax. These will show up. These are services that will show up contextually. Okay, so let's imagine we raise an invoice and an early payment loan is just one click or one swipe away. And finally, data, and of course, AI. So in this layer, we gather all the data, all the rich data sets that we are able to get from all of these transactions, from all of these services, and the financial institution can leverage this data to drive revenue and also to deliver a great customer experience to their customers. So when we say build a super app, we just mean layering these types of capabilities. So we are not creating a monster monolith. So we are layering these capabilities. And what does this mean in terms of tech? Of course, secure, consent-driven access to SME account data and payment initiation from inside the app. So we need open banking, we need programmable APIs to achieve that. We also need cloud native capabilities. So once we have the data, we need a chassis that will scale. And scalable cloud architecture will let us ship invoicing today, payroll tomorrow, and all of that without having to redeploy the entire beast. Real-time payments, of course, essential. Also event streaming, support, instant transaction processing, and broadcast every balance change. So every mini app or every service in the ecosystem can react in real time. Embedded finance and banking as a service. So why do we need to build cards, BNPL, or insert insurance from scratch when we can just plug them in? So banking as a service module will let an SME issue virtual cards and or payrolls all inside our own UI. AI and machine learning layer. It's very important to automate every process, every decision, as well as personalizing experiences, tailoring experiences to the user. So picture a chat CEO that whispers that you'll be 10K or 20K short for next Tuesday's payments, and just suggesting an overdraft on top of that. So this is the type of capabilities that we can achieve with this tech. Further on the spectrum, low-code tools, because we need also to empower third parties. Okay, so the low-code SDK, together with the sandbox, means that the fintech can drop a mini app in just in weeks versus months or years. And when we stack all of these layers together, we have all the pipes, the cloud, the real-time rails, the plugin capabilities, the low-code, and the AI. We have the engine to turn a regular banking super app into a regular banking app into a truly super app platform, an SME super app. And given all of that, we did an exercise. We did an exercise of picturing what would look like the end game super app. So imagine a founder that wakes up in the morning, opens one app, and by 9 a.m. he has invoiced a client in euro, he has paid the supplier in US dollars, he has scheduled payroll, and launched an SMS or a WhatsApp campaign to all of his customers, all without switching contacts. So welcome to our end game super app. So we have first pillar, of course, is Money OS, live multi-currency ledger, instant pay-in, payout, sweep rules, FX hedging. So this is the heartbeat of the app, and the one that every other modules reads. Then we hit the ops hub, invoicing, bill capture, auto reconciliation. So no more Excel. Invoices are sent and match themselves while the owner sleeps. People on payroll, so contractors, full-timers, taxes, benefits, all fields automatically. A single approve swipe on the month end, and the whole team is paid. We have a growth engine, so with storefront plugins, pay by link, loyalty programs, and even ad and social media credits. And of course, we have the marketplace and ecosystem. So this is where best of breed SaaS mini apps can plug in anything from shipping labels, legal docs, ESG calculators, so anything and that can be monetized via revenue share and with no developer backlog. Intelligence layer, so data from every model flows into this layer, and LLMs will forecast cash gaps, will flag anomalies, and even draft emails for suppliers. And then we have the trust fabric, because security is a must. So it needs to be seamless. We need to have secure authentication, device risk checks, continuous AML, so regulators sleep well at night, fraud losses stay small and tiny. And finally, we have the integration pane. So we have pre-built connectors with event hooks pushing data to ERPs, e-commerce, or even logistic platforms, and power users will embed the app into their existing workflows instead of copy and pasting data. So we can dream about an app like this, right? It's good to dream. But the reality, even if vision slides are exciting, the reality is always harder. So we know that there are a lot of hurdles, a lot of complexity that financial institutions need to overcome to achieve something even close or not even close to this kind of offering that we've seen. So we will try to build a real world super app. So we'll try to design a 5-year roadmap for a bank, for a financial institution. And we understand that there is no one-size-fits-all roadmap. So, but let's do a theoretical exercise. So let's imagine some bank, some financial institution, and this bank owns a legacy, a monolithic core, has a few less than ideal customer channels on top of this, a few services around it, and this bank, this imaginary bank, decides to undertake this super app building journey. So we are trying to do an exercise to build a roadmap for this particular use case. So the first step is listening to your customers. It's not coding, it's not creating requirements, it's not gathering tech. So it's listening to your customers. So the SME pain points, they may or may not overlap over different regions, even inside Europe. So you know that Europe is also fragmented in terms of customer needs, in terms of regulations, in terms of priorities. So the priorities will not be the same from region to region. So we need to understand that. So in Spain, a priority could be, I don't know, card interchange fees, or instead SEPA onboarding. This could be the biggest pain, while in Germany, invoice financing or export FX exposure, that can be other priorities. So each financial institution needs to understand their own reality and what are the customers claiming for. Next, we need to ask the question, so how equipped are we in terms of technology, in terms of infrastructure to handle this kind of vision? So can we expose and read APIs from the core? We have at least one product live running on microservices and talking to the core. So there is an endless list of these hard questions that we need to ask, and to get the replies, so we can truly understand the gaps from where we are to where we want to go. And finally, internal talent and culture. So this is very, very important. People. So even if you outsource all the development, you will need, at the very, very least, some project management that understands the business and can translate the requirements into tech. So this is the bare minimum, as well a very strong internal IT team to support the changes in terms of tech. Also, more broadly speaking, all these changes need to be closely managed from the inside. But given all of that, let's look at our roadmap. So we divided our roadmap in 3 stages. So as I said, this is a very, very high level 5-year roadmap to reach the super app stage. So first thing will be an unified cash cockpit. So all the accounts, the cards, all the products, they will show up for the customer in one place. Smart payments hub, owners can quickly pay and get paid. Role-based or permission-based staff access, meaning for the customers, so they can add new users and easily set their permissions to use and to transact within the apps. Staff cards with spending limits, and a thin overlay ledger in the cloud. So this is to start laying the ground and preparing the integration capabilities, even with a legacy core banking system. This is what we are going to build. Okay, embeds, meaning we are going to bring a partner or a banking as a service provider. We are going to add invoicing and pay by link via a specialized vendor, and we are also adding some basic FX and cross-border payments also through a provider. So the rationale behind that, we are going to aim for quick wins for the customers, and of course not undertaking a very risky, core-changing project. Stage 2, we are going to extend this overlay ledger to payables and receivables. We are going to have an API orchestration gateway with Event Bus on top of that. And we are going to have machine learning, to add machine learning, auto-reconciliation. We are going to build this engine trained in your own transaction tags. We are going to add a few more services, an expense scanning OCR service. We are going to add payroll and embedded line of credit for working capital. So the rationale here, this specific bank is focusing on their own priorities, okay? What is most critical for them in terms of business, and adding extra features, third-party features, with less riskier developments, adding the functionality anyway, but not undertaking a lot of development in terms of those features. And the stage 3 would be the actual super app readiness stage. Okay, at this stage we would have a data lakehouse, full-on data lakehouse, some lightweight advisory widgets for cash flow, forecast for a couple of insights here and there throughout the UI. And also now we need to build a partner console and the revenue sharing tool for all the third-party mini apps that are going to come into play. We are going to embed, of course, these mini apps, insurance, logistics, whatever you feel that adds value to the app. And the rationale here is that by now, so remember, this is by the 4th or 5th year, our user numbers is growing. You have a good number of users, and these marketplace capabilities will allow the financial institution to have new revenue streams with a marginal investment. So this is the functional snapshot. So by year 1, we will have aggregated balances in real time, QR, pay by link, tap to pay, all of that. In year 2, we would have invoices, bill capture, virtual cards. By year 3, we will have dynamic line of credit that turns data into offers. And by year 4, we will have a 30-day cash flow radar, also with AI reminders of due payments and so on. And by year 5, we would open the partner store once the user base, the daily users are stable. So this, from a platform builder's perspective, even in five years, this is for us is a perfectly reasonable timeline. So each cluster will piggyback on the last one, on the tech enablers that we just saw. So open APIs, cloud microservices, event streaming, embedded finance. It will be built on top of that. And from our engineering chair, this is a very realistic roadmap. But I would like to leave an open question for this from your banking share, so people from the bank. So if you consider people, budget, governance, does this feel viable, or do we need to resize the ambition? So I will leave this open question around this roadmap. And as for closing remarks,
Jose, thank you. We're talking about super apps. I think that's been a super presentation, and I think any of banks or institutions that are on our webinar this morning who are considering articulating the burning platform at an executive team level, you've really covered the ground, and you've also covered what is a very practical and reasonable roadmap of ambition for an institution that wants to tackle this, as you say, in a layered format. Excellent. So thank you. And I think that piece around, the bit that resonated for me, layering capabilities as opposed to a big bang, where you're potentially risking legacy tech stack or infrastructure. That certainly resonated with me. Do we have a question coming through? Ludwig, have you your hand up?
Yes, thanks a lot. Jose, very well prepared presentation. Maybe do you have a rough estimation when it comes to investments? What such a 5-year would be on a rough horizon? I know that you can't give us any specifics here, but if we need to do a business case, we need to find also at least at the beginning, if we are in the beginning stage, an idea what would this mean in terms of investment?
Yes, and this is literally the million-dollar question that we get every day from the financial institutions that we work with. This, of course, will depend a lot on the stage that you are at right now, and well, we covered a lot of things in terms of features, in terms of functionality, in terms even of tech capabilities to enable this road. Some of financial institutions already have gone through this path of building cloud capabilities, scalable architecture. Some have not. So these would be very, very different scenarios. But in terms of functionality building, we do have an idea of investment. It's very straightforward. It's hard to shoot a number without knowing anything about the reality, but this is something that we are accustomed to do, to give a high-level horizon of what's going to happen in year 1, year 2, year 3, year 5. So this is something that we do every day. Yeah.
Okay, but hard to put a generic figure on it without knowing the individual institution.
Yeah. It's very, very hard. Yeah.
Okay, thanks for the question, Ludwig. Okay, I'm going to hand over now to Aditya Sharma. Delighted to have you with us from Standard Chartered, and very interested to get your perspective on the topic. So over to you.
Thanks, Ken. Jose, that was a very good presentation. I like the way you had shown all the stages that a bank should go through, and I think a part of that is what I would be touching in my presentation as well. Just as an introduction, I manage global products for Standard Chartered Bank. For those who may not be familiar with the bank, Standard Chartered is it's a London-based bank. It's a British bank with major presence across the emerging economies, primarily present in Asia, Africa, and Middle East. Bank has a history of more than 150 years, and clearly for the topic that we're discussing today, we are a traditional bank. I think what becomes relevant for today's discussion is that while we have been a traditional bank and present in the SME space for a really long time, we embarked on the journey for a rapid digitization and adopting all the new age practices. That was close to 4 years ago. And we have made rapid advancements in that space. What I want to talk really today about is the real experience of having worked with one of the leading super apps, what we saw from China here, and one of the most successful super apps, and we have worked with them. So what I'm going to talk really today is more about how as a bank we went about doing it, what are the kind of things that we faced as challenges, how did we go about implementing it, and what has been the success. And maybe that can help you to understand some of the real life things that really happen with us. Let me share my presentation and walk you through. All right. The main thing that I wanted to really share with all of you is about how do we look at it from an SME lender's perspective, and how do we look at a super app ecosystem for a traditional bank? I think we already heard today, right? What is it, a super app ecosystem, or what a super apps really bring to the table in terms of the convenience and in terms of their ability to integrate multiple services and really create that unique experience for the clients. When we look at from a lender's perspective as a bank, if I really have to look at it, and if I have to say, what is it that I can use a super app for when it comes to financing the SMEs? I'm trying to give a comparison of what a traditional lending could look like for us when we look at an SMEs. And we could very clearly see that we were for years we have used some of the very traditional sources of income, very limited, that we would use when we are going to assess the creditworthiness of a customer, especially SMEs. And traditionally, banks have been notoriously known for always being shy of lending to SMEs. For some reason, SMEs always been considered as a high-risk segment because of the lack of transparency around their financials, around their business health. And essentially, when I look across countries in my role, I see that more or less in every country and every geography, what we primarily use is a set of financials, which could be pretty much dated. We use some bank statements, which are highly prone to being engineered. Tax information, which comes from sources, and you'll be surprised that there are many economies who still do not have a legit tax information available. And last but not the least, a credit bureau score or a behavior that we try to make sense of. And as a combination of all of this is what banks have traditionally used, which always gave a very unidimensional view about the status of a client's business. It was a very static information, would not really tell you more about the depth about how the business is really operating from a day-to-day basis. And this had always had the limitations that since you were not able to really predict the probability of default of a given client, if I have to really use the bank term, that is something that always made the access to financing for SMEs a huge issue. Then comes the super app ecosystem, or if I put it in a very broader sense, where we looked at how can we lend using the data rather than the documents that come from customers. And that is where we found that the difference is massive. When I look at the data, and especially if it comes from a super app, if I look at an example of a WeChat, for example, right, which has multiple services on it and more than 800 million customers and transactions happening on the website. The extent of the availability of the data about a company or a client can be massively useful. If you look at the super app ecosystem, the kind of information for the same client for whom I was so far only looking at the financials, now I can actually look at all the related parties, all the buyers and suppliers, the frequency of transactions. I can see the size and the velocity of those transactions. I can look at the shopping behavior. I can look at the payments, how the various payments are being made in different platforms. The credit history, the investment profile, the places or the geography that the business is today spread across, or the spending habits and the insurance habits of that entity. I can also know a lot about the transaction patterns, about the seasonality of the business, about the areas of the exports or the imports or the domestic nature of the business. And I can also know about the legal status, the litigations, and of course, the social engagements. Now, suddenly about a client about whom only all that I knew about was some information about the financials. Now I know a whole lot about the client in terms of the how that business really operates. And I think this is where we really as a bank saw the value of this information and the data points. And the real challenge for us was that, okay, if I know so much about the client now, how do I use that to remove that uncertainty or the lack of predictability about that client's business? If I have to lend to a client for a period of 3 years, 5 years, 7 years, my biggest concern has so far been that for this 5 or 7 years, will it still be a going concern? And now if I have this information which is available, which is not only available at the time I decide to finance the client, but if I know that this information is available to me at the click of a button, probably every day or every week, that completely removes the uncertainty about this business and gives me as a lender and makes me far more powerful. And this is exactly what we decided to use 3 years ago. And we thought that how can we integrate this into our financing? And what is the best way to embed ourselves into this ecosystem so that we can leverage on the richness of this data? And how can we make it to work to our advantage by financing more and financing better clients? Some of the names that you see here are the universally known, very well and popular platforms who have worked very well over the years. We integrated with some of them and worked through this entire model. If I go to the next session, so once we identified this, what was our really our approach? As a bank, we have been a traditional bank and highly regulated for that matter. We could not have had a platform of our own. Clearly, all that we did was banking. What we realize is that if we can integrate ourselves successfully with one of those platforms and one of those super apps through a partnership-led approach, then we suddenly not only just gain data, but one, we also gain access to a huge base of customers. When we started 3 to 4 years ago, that is what we realized, that we suddenly had an access to a base which was more than 15 million customers. And there was certainly no way as a bank we could have reached out to them if we do not have a partnership with a partner like this. Having an access itself was not enough. And that is when we started realizing that if we want to scale up and really use this model to our advantage, we need to make changes at multiple levels. It really meant that we had to change the very basic fundamental model of our own business. As a traditional bank, as a bank which had its legacy systems, and as a bank which is definitely managed and ruled by a lot of compliance and regulations across different geographies. Asia has different regulations. Within Asia, countries have different regulations. For us to do that, we had to really redefine, first of all, our strategy in terms of how do we want to work on this model. We also had to work on identify the kind of clients that we want to onboard. I mean, I can have a base of 50 million or 100 million customers out there. That doesn't mean that all of them are my profile of clients that I would want to work with as my part of my strategy. So that segmentation was quite important. And then came one of the most important things, which was about what is my risk appetite or my risk approach, which is going to be used for this kind of a model. Something that we have always knew, and typically that happens for all the banks, especially traditional banks, that you have lived and refined your risk approaches or risk appetite over many, many years. And then you have settled on a certain way that you do business. Getting into a new model of business, which can be so different to the way you have always done before, which meant challenging our own assumptions about risk, challenging our own appetite, challenging our own approach to how do we do underwriting or the risk management. Last but not the least, how do we deal with clients? And that brings a lot of importance about how the client journeys should be. As a bank, we started automating and we started digitizing a couple of years ago, and we had our own client journeys well established and they were running quite well. But when we are dealing with a partner and when we're dealing with a super app ecosystem where things don't happen in days like we are used to, but they happen in seconds. And it's a huge marketplace kind of an environment where you are not the only bank or the lender. Your journey has to be completely different. And to reimagine that journey in itself was a huge challenge and an uphill task for us, because as a bank which is present in 50 markets, have been doing business in a certain way, it was in a way reimagining how this business can be done. And the last point, which was in our approach, was that we had to really commit to a test and learn approach. We had to really put a lot of pilots in place. We had to put a lot of testing programs in place, knowing fully well that not all of those tests and pilots would work and succeed. And the commitment to constantly learn was something that we did it. Ourselves, from the time we launched it, it took us the initial 1 year. We had a very steep learning curve. None of the things came through in terms of success the way we had imagined, and it involved constant improvising on what we are really trying to do. To share, did this approach really pay off? Our outcomes were quite impressive, not immediately, but yeah, as we went along, we found that our client base definitely increased significantly. There was 70% increase, and the loans and advances that we were giving in a certain segment, it definitely increased in a huge way. We in fact, so much so that we had not even anticipated the increase in volumes to that extent, and a lot of our own capacity that we had built inside our organization was not enough to meet that demand. We essentially made a transition from a feet on street model that we were used to a completely digital model. So while we still had our own digital journeys in place, there was a lot of reliance on market sources, on the relationship managers. And we had to transform to a model where we were only sourcing digitally completely from a super app. While it definitely gave us an advantage, our costs significantly reduced in terms of our acquisition cost, our operations cost, our processing cost. And the biggest thing was that it brought down a lot of our credit losses. Now, for all of us who have been in this space where lending to SMEs has always been historically fraught with risk in terms of the credit losses, and that's why banks have always been avoiding it. But what we really realized is that working on this, the outcome was our credit losses really were controlled. Even though a lot of these markets that we deal with were still coming out of the impact of COVID, still we found that despite muted growth, our losses were down almost 50%. From a client experience point of view, anything that we would have otherwise taken in our own digital journey, a loan disbursal to an SME in a 3 days time, I'm talking about small businesses here, we actually moved to a model where we were working with our partners and we were disbursing the same up to a $500,000 loan in 10 seconds. It was a massive change for us, and I think that's why it brought about a lot of learnings for us. But to achieve each of these things, and especially when you're talking about achieving loan turnaround time of 10 seconds or 15 seconds, it required a lot of changes in the way we do things. And that is what I want to highlight and focus on in this slide. That what are the steps that we had to really go through? And that journey to begin with, as I said, the first year wasn't smooth. When we first started, and I still distinctly remember, the very first month we had achieved an approval rate of something like 10%. And that was far lower, as all of you know. For every 100 loans that got referred to clients who showed interest in us, we were able to approve only 10 cases. We definitely knew that this is not a scalable model. This is not the optimal solution that we're looking at. And that made us to, again, go back to the drawing board, look at our design, look at how we need to change and further align with the market. And I think that's where we had the maximum learning. Some of the points that Jose covered in his presentation earlier is that you have to go through a lot of stages to come up that curve. I think I'm talking something similar to that. I think one of the mistakes that we were making is that we were going back and trying to map a lot of things based on the knowledge that we had about our own systems, our own compliance, our own practices. And I think what we realized is after we saw the initial results, when we were able to approve only 10% of the cases, the 90% got declined, we realized that what we were thinking and what we were trying to do was quite misplaced. We were trying to align the market reality to the way we do things, and we realized that it has to be exactly the other way. We have to drop the way we do things, and we have to align with the way market would want us to do it. And I think listening to that made all the difference. So when we started, how did we go about doing it? Let me just walk you through the steps. And I think any traditional lender, I would hazard a guess, would have to more or less go through the similar steps. So when we're working on a super app ecosystem, I think what is really important from a very commercial point of view is that you need to work with an ecosystem which can give you a certain amount of scale. And this scale is not only from a profit point of view, but I think the scale is important because the more clients and the more transactions and the more data points that you have, the more accurate you become in terms of as you improvise, your models become better, your ability to underwrite risk become better, your ability to cross-sell and expand your base. It all it depends on the volumes. So I think it's very important to first get your partner right. It's important to have a super app which has the right foundation, the right services in place, and the right scale. Once we got that part out, and I think we were lucky to work in China with one of the best and most developed super app. And then we went to the second thing, which is even more important. More often people think that we're working with a super app is just all about technology, but probably that's only one part of the story. When you're dealing with them, and especially when it comes to financing, the risks are a whole lot different. It just starts with the things as it goes with the compliance risk that comes with it. Which are the clients who are dealing with you? We have to remember that these are the clients who you are not going to meet face to face. These are not the clients who are you going to visit their offices. So they exist somewhere in the universe. All that you're seeing is how they do business. And based on that, you're going to lend maybe $500,000 or $1 million. And you do not know those clients yourself. So it's very important to know how do you do the diligence of these clients and whether that information that you need to do and complete that due diligence about the client, is it available in that super app ecosystem? We have to remember that the super app ecosystem is not designed only for lending. So the data that they have is primarily there so that they can create a better user experience for the client, not for a lender to assess them for credit point of view. So you have to really choose the right ecosystem and work together to ensure that you get those right data points, which can help you to mitigate and alleviate those risks which arise out of sanction risk, money laundering risks, and a lot of those risks which are associated with lending. So that was the second stage where we had to work together with the local systems, local compliance teams, with the regulators, our own internal compliance teams, and ensure that we get to a stage where we get our compliance norms correct, even though we are deviating from the way we would do things in the normal business. It meant working with our internal stakeholders to create a lot of policies. That bank had been using it for many years. And something interesting that I should share here is that when we talk to a lot of regulators, we found that even regulators, to a great extent, have not updated their own policies and regulations, which would suit the new kind of lending. They would still expect banks, they would still expect lenders, financial institutions, and BFCs to adhere and work in the traditional framework of rules. And when, as a bank or as a lender, you want to change that and you want to work with them, you are suddenly in violation with a lot of those regulations. So I think for this, the learning has been that for this super ecosystem-based financing, if that has to really succeed and scale up, one of the things which is very important is that banks in those ecosystems or lenders and fintechs need to come together and have that right negotiations and discussions with the regulator so that there is a strong appetite to support this ecosystem and the new ways of lending. But we'll talk about that a little later. Tech integration was our next step. And this is where we realized that as a traditional bank with legacy systems, again, something that Jose spoke about, I think it's very difficult to change. And not all the legacy systems would be open to new developments, to accepting APIs or liable to change. Now, to do that, that means you have to make new set of investments and create new systems, onboard new platforms, create new digital infrastructure within your bank if you want to really work with this super app ecosystem. Not always your legacy systems will not be the best place to work with them. So if a lender is talking about and thinking about scaling this business, I think this is a very important part of strategy, that what is your digital strategy going to be? What is your investments that are going to come into this space? Redefining the client journeys was once we are done with the compliance and the tech and we were sure about it, I think the next thing we looked at was about then how do we change the client journeys and experience so that we are able to lend in 10 seconds when historically we have taken 10 days in the past, then 7 days, then 5 days, then 3 days. And now how can we achieve that in 10 seconds? And that was really the way where we had to relook at the way we look at the clients, we look at the assessments, how we do the scoring, what kind of information we consume, and then how do we run those algorithms. So pretty much everything needed to change. And that's how we changed everything. We first reached to a stage where I still remember in the first 3 months when we still had not reached 10 seconds and we reached 20 seconds or 25 seconds. And our partner had spoken to us and mentioned that if it's 20 seconds, clients are not coming to you. You have to reach 10 seconds. We again worked on it for some time, made a lot of changes, and we finally reached a stage where we are able to approve even a $500,000 loan in 10 seconds.
Aditya, I'm just looking at our clock here, and we're running a bit tight on time. And I'm very keen. Your next slide is really good from a learning perspective. So if we could cover the ground a little bit tighter, I'd really appreciate it. Thank you.
Thanks, guy. So if I continue with that part of it, I mean, definitely it required a lot of changes on the credit side and your appetite as well, which I spoke about in a few slides ago. And I think that is where we needed to change on multiple fronts. I think the key message here is that if you want to really change and we want to work with a super app ecosystem, I think the changes are required at multiple stages. And when one has to plan about it, I think you have to really look at it in totality and not only to get probably carried away with the power of the data or the super app ecosystem itself. Some of the points I think I already covered in terms of what did we really learn. The key points being, it needs a massive mindset shift if you want to really pivot to this model of SME financing or SME growth. It'll be probably easier for a new age company, a new fintech, which has started with this as the core mission and value. But for a traditional lender or a traditional banks, if they have to change, it will need a huge mindset shift. Probably you have to work with an entirely different new team and not work with the teams or the people within the departments within the organization who have been doing traditional business, because changing that mindset is not easy. Another learning that we had was no matter how much you're embedded into that platform, getting that customer stickiness is extremely difficult. You have to be extremely agile and be on top of your game to ensure that you are constantly engaged with the client if you want the same client to continue to deal with you. So the ecosystem itself is so huge and it's so competitive that it's for a client who has multiple options. It's not only enough to be a part of that ecosystem, but I think you have to be absolutely agile and extremely analytical and client oriented to be on top of it. To constantly keep addressing the needs. Another key learning was that for us to be successful, we have to always remember that as a strategy, it has to be a supplementary strategy as a bank. And we continue to work and enhance our outreach to those set of clients who we are not able to reach through our original models and through banks, our branches, our own channels. And this needs to be definitely a supplementary and an addition to the entire model. We have experience of banks who have completely moved to this model, and I see them struggling as well. So I think somewhere the right fitment of it in our experience would be we work with both the models together. Agility, as I already covered that point, it is extremely important for you to be constantly dynamic. As we started with our initial approval rates of 10% and we took it to 70-80% approval rates in a matter of 4 to 5 months. It was a journey, but I think that agility is important, where you should be willing to change, to reach and keep changing yourself to suit the requirements. I think Jose also spoke about the talent and people, and I think this is a very critical part. Your existing talent, existing people who are in your organization may not have the right skills. So you have to look out for very critical skills which are required for these models to work, these models to advance within your own scheme of things. The data privacy, compliance, and client consent in every stage, since we're dealing with the client consent all throughout. It's extremely important that we focus on this first before we think of some of the commercial aspects or the experience, because a compliance or a data privacy or data security issues can set your entire model back. And we had to rework on this a number of times so that we get it right. And the last point I would feel is that you have to very clearly understand that the super app ecosystem in the current scheme of things, the way we see it now, is more attuned and directed towards the micro and small enterprises. So you have to really know which is the segment. The very small segment is they tend to benefit the most out of it. And probably that is also the segment that many banks are not able to reach in a cost-effective way. So our learning is stick to that segment, which makes sense and win-win for us as well as the client. My last few words, which is we completely believe it is definitely going to be the future. We have to keep investing in it, and as more and more transparency and clients come up to share their data with them, we expect that very soon and gradually clients it will bring about a shift in the client's behavior as well, where they would be keen to share more and more data. And that will create a very credible and a digital history online. You don't have to worry about the bureaus anymore, but overall banking and economy, I think, will benefit a lot. So we think this is a future where, as a bank, we would like to work towards. So thank you, guys. That is mostly what I wanted to share and speak about in terms of our experience at Standard Chartered.
Aditya, thank you very much. And it's great to hear from. I call you such a global practitioner succeeding in this. You know, what resonated with me particularly, 500,000 loan approval in 10 seconds. You know, there are many SMEs, many SMEs across the globe who would be delighted to get 500,000 of a decision in 10 days from their bank, and to build to 80% plus approval is absolutely sparkling. So some great learning, some great insights. Thank you very much for sharing. We're going to put up, there's a Slido poll live there, just to get your perspective, if we could, on which of the following you think would add the most value to your SME digital platform. So you can select multiple options. Some people have voted already. So if you wouldn't mind accessing that, we're very keen to get your views. And while we're doing that, can I introduce Boris Diakonov, who has joined us from Anna Money. Boris, I think you're online with us, I hope.
Hi, yes, I am. Great to be here with you.
Boris, I'm very familiar with Anna. I work in the UK, so maybe for some that aren't, could you just introduce the firm and give a sense of the phenomenal SME adoption that you've experienced in the UK market, particularly, and what you think that driver of that success is?
Oh, Anna Money was founded in 2017. We've been live since 2018 roughly, and it's a business account that does your taxes. Before LLMs and ChatGPTs and all have you were popular, 7 years ago we launched app only, and that app only had a chat in it. So we were always natural language powered on all the models, but still. And we found SMEs in the UK are severely underserved because banks naturally just don't have a feel for what SMEs are going through, because in reality, there are no SMEs. There are people who have decided to start a side hustle, or there are immigrants in the UK. Almost half of their businesses are run by immigrants in the UK just by the sheer fact that they cannot make a living otherwise. Their English is not proficient. They don't understand all the issues about accounting and taxes and reporting and filing and company's house and what have you. So they just kind of try to do the right thing. Sometimes they don't try, they have to be educated. So we have provided kind of an integrated solution for them that's app-based. You can type there, pay Ken again, like previous time, and it would understand that Ken issued us the same invoice as the previous time. It would automatically do the tax prep. They would know roughly how much tax they own, and then we file for them. And we also help out with company formations for last 2.5 years. So we've been growing like crazy like that.
Just addressing particular pain points in that marketplace, yeah?
Well, and also acknowledging that there are no SMEs there. There are people behind the screen.
Yeah. Listening and understanding the customer. Yeah. It sounds basic, but it's anytime I'm talking to SMEs, they're saying, one size doesn't fit all. You need to fit my size, and you need to understand my business and my market.
Exactly.
Thanks, Boris, and I really appreciate you joining us. The outputs of the Slido poll, embedded lending and financing is coming up as the one that would add most value. And I'm mindful. We had a piece of research from EY a couple of years ago, and 2 years ago we had some survey outputs that were saying that 60% of SME lending is going to be coming from embedded finance in 5 years. And if that isn't a burning case for disruption of traditional lending practices, I don't know what is. Marketplaces for business services, 50%, AI-driven insights and dashboards, partner ecosystems. Okay. Jose, let's move in if we could. We have a couple of minutes, and we'll take a couple of panel questions if we could. So if everybody who's there can join us again, please. Jose, if I can ask you, to banks who are thinking about super apps and thinking, or maybe joined this session today and are saying, well, we're not really in this space. We haven't really got our act together. How do you see traditional banks responding to the shift? Are they starting out from an ambition to build their own super apps? Are they looking at partnerships, or are they heads in the sand and resisting to a degree?
Yeah, that is a great question. So I think Aditya's presentation was very strong in the point that they had the requirement. So this was the 10-second loan, and they moved the world to reach the requirement. So I guess before thinking super app, the financial institutions need to nail the basics. So they need to nail their core products, being it lending, transactions, whatever it is, and then start to build on top of that. So listening to the customer need, this is key. Understanding what the customers really want. This is a very strong point Aditya made. So we were trying to do things our way and push it to the market. And when we understood that we needed to do the other way around, so they need to understand what is the market need. And we have a lot of signals coming from companies like Money and the new incumbent, the newcomers that are coming to the game. So I think I see, and I'm sorry for saying this, I see a lot of old way of thinking in terms of traditional banking from the financial institutions, and there needs to be a shift in the mindset, a shift in the mentality before there is a shift in the real offering. The world is changing. It's changing faster and faster now. Now we have all this AI boom that I think it will be great and generate great opportunities for the financial institutions, but financial institutions need to be prepared, need to lay the foundations to ride this wave and to provide the customers what they really need. So this is really the first step for a super app is nailing the basics.
And Aditya, looking at all the progress that you've made in Standard Chartered, where does AI bring us in this in the next phase of development? Do you see the bank helping with automation of SME back office type operations and functions? Do you see any value set there?
Yeah, it's actually quite a lot, Ken, because if you really notice a lot of talk and discussions that happen around AI, today they are about getting your client selection, getting your client onboarding right, When we looked at it, we realized that it needs to go beyond that, and you have to look at end to end. So I give you an example. When we are looking at now today that when you're sitting with on millions and millions of dollars of book or billions of book, you need to use AI for how do you manage your collection activities, for example. How do you know which are the clients who are going to default first? Who are the clients who have a higher propensity to pay? Which are the clients who have no propensity to pay? Now, we at our bank, we are using AI extensively to not just work on AI-related models for getting the clients out, but once we have onboarded the clients, what are the different needs that clients will have based on their transactions? What is it that they are likely to be in next 12 months? And if we have lent any money to them, what's the probability they're going to continue paying me or they're not? And if I have to get money or collect money from them, who has the highest probability of paying that back to me? So we are using AI not just for the initial stages, but it's end to end, using those models for the entire client management.
And Boris, breaking into a new market, what were the particular challenges from a regulatory perspective that you had to navigate or overcome in terms of building your own ecosystem?
Regulatory was not actually such an issue because UK is quite open to business, to banking as a service model. Then UK's regulator was giving out email licenses right and left many years ago. They're taking them away now, but that's yet another story. I think the largest regulatory challenge now is APP fraud legislation, but that's bound to UK only. Effectively, banks are liable for 50% of the money they either send or receive that were deemed fraudulent by the sending party. So if a client says, well, I think I was defrauded to pay Ken for consulting 12 months ago, we as a bank owe 50% of that. So that becomes kind of a challenge, but also a great opportunity to work with all the modern models. We can work with all the systems, harness power of, I don't like the word AI, but let's say power of data and decision making to actually be smarter about navigating these risks. But the largest problem was not regulatory. It was actually getting our feet through the door, to be known branding wise, and to get the offer just right.
And if you were to offer, put your competitive hat off, take your competitive hat off for 1 minute, and we've 50 odd people from banks around the world on the call this morning. If you were giving one bit of advice to somebody that was thinking in developing their capabilities in this context, what would that be?
If it is now for the UK market, I would strongly advise against it because it's the red ocean by now. Just too much competition. Yeah. But again, for larger banks, honestly, in many markets, I think they have lost the segment already.
Yeah.
The markets where the fintech competition is strong, it feels like it's a bit too late to play this game. Partially because because it takes just different DNA to serve business clients at mass. Yeah. And neobanks already had years of building that and experimenting that, and larger banks just don't have the competence of just kind of building that from scratch. But I would advise on focusing what they can do best, which is working with risk and just harnessing the power of existing database there.
Yeah. Well, I think the thing that came out for me in all the discussion this morning is the power of data and the deployment of data, and tear up the playbook. the traditional playbook of 3 years accounts, cash flow projections, and a business plan, and get real. I committed to people to finish by 10:30 my time, so I'm going to draw it in. I want to thank our great speakers, really great presentations, and you covered the ground so well. I really appreciate it. Thank you very much to eBankit, and thank you very much, Aditya, from Standard Charter, and Boris, thank you for giving your own insights from an anti-money perspective. Let me just give you a sense of other events that are coming up from a Chorus SME banking community over the period ahead. We're doing a particular piece of work around bridging retail and SME banking, and looking at that whole context of a unified customer journey. So we're going through a series of one-to-one interviews as we walk through the summer, and that'll be supported by a steering committee. We run into a leaders roundtable on agri-banking transformation in September, another one on driving better credit decisions in SME banking in October, and Aditya, you could certainly play into that one in the context of the great story you told today. And we have a webinar on the future of Treasury Services and some other events as we walk through November, December. All of these events are very much steered by our steering committee and your own feedback. So if there's something you think you want to hear from Chorus, please let us know through the community website and the community page. For now, let me wish everybody a really pleasant and enjoyable summer. Thank you for your engagement today. I know a number of people are taking holidays over July and August. I hope you enjoy them, and we'll be back with you later on in the summer. And thank you for your participation today, and I wish you a good day. Thank you.
Thank you. Bye.
Thanks
Bye.
for the great.
Thank you.
Thanks, everybody.
Thank you. Bye.
Bye.